Good morning, and welcome to Market Sunrise. So glad you're here. Let's get you fully briefed on everything moving markets before the opening bell. Quick reminder, nothing you hear today is financial advice or a recommendation. We break down the news so you can do your own homework. And today's lineup is stacked, so let's get right into it. Here's where U.S. markets stand heading into Monday. The Dow closed at 52,498 in the prior session, slipping 0.25% as sellers nudged blue chips lower into the bell. The S&P 500 closed at 7,515, pulling back nearly 0.8% as broad market selling picked up steam late in the day. The Nasdaq led losses yesterday, closing at 25,873, down a sharp 1.5% as chipmakers dragged the tech-heavy index lower. Russell 2000 closed at 2,953, dropping 0.8% as small caps got caught in the risk-off rotation. S&P futures are pointing lower this morning, down 0.2% as traders brace for a data-heavy session. Continuing with the U.S. pre-market picture, Nasdaq 100 futures are under pressure, down 0.3% as the chip sell-off threatens to carry into today's session. Dow futures are hovering near flat, down roughly 40 points or 0.1%, showing some relative resilience this morning. The 10-year Treasury yield is firming at around 4.61% as bond traders position ahead of this morning's CPI release. The 2-year yield is holding steady at 4.23%, reflecting a market that's waiting on inflation data before repricing rate expectations. The dollar index is barely changed at 100.93, down just 2 basis points, as currency markets sit tight before the data drop. Now here's what's on the calendar, and it is a big one. June CPI is the marquee event at 8:30 a.m. Eastern. This is the number that could set the tone for the entire week. Fed Chair Kevin Warsh testifies before the House Financial Services Committee at 10 a.m. Traders will parse every word for clues on the rate path. Big bank earnings kick off Q2 reporting season this morning with J.P. Morgan, Goldman Sachs, Citi, Wells Fargo, and Bank of America all on deck. Nvidia remains under pressure, trading in the $197 to $204 range pre-market, as a global chip cycle scare keeps the heat on the AI trade's biggest name. The VIX fear gauge jumped about 13% to 17.1 in the prior session, while CNN's Fear and Greed Index sits at a neutral 49. That tells you the market is nervous but not panicking, with traders hedging into CPI rather than rushing for the exits. Let's turn to the deals and catalysts shaping individual names today. Twin V PowerCats is going private through a merger deal, taking ticker VEE off the public market in a management-led buyout. The first publicly traded fusion energy company made its debut via a SPAC merger, rocketing 38% on day one, as investors bet on the next frontier of clean energy. Biotech Agenus is raising up to $340 million through a placement, $85 million up front, with another $255 million in warrants to fund its pipeline. Q32 Bio is surging 72% in pre-market trading after releasing positive clinical trial data, making it one of the biggest movers of the morning. Babcock & Wilcox announced a $50 million share repurchase program, signaling management's confidence in its valuation. More deals and corporate actions to keep on your radar. Shipping giant Maersk is launching a roughly $1 billion buyback of up to 6.3 billion Danish kroner over the next 12 months. StoneX Group announced a 3-for-2 stock split, with distribution set for July 17th, making shares more accessible to retail investors. Now let's run through the biggest analyst calls of the morning. Keysight Technologies gets upgraded to overweight from equal weight at Morgan Stanley, with the price target bumped to $400 from $350. A vote of confidence in the test and measurement giant. Shopify gets a double upgrade to buy from hold at Jefferies, with the target lifted to $160 from $140, as the analyst sees accelerating merchant growth. Capital One's price target is raised to $245 from $215 at JP Morgan, which maintains its overweight rating on the credit card lender. Deckers Outdoor, the parent of UGG and Hoka, is upgraded to buy from hold at Jefferies, with a target boost to $130 from $110. Biogen picks up an upgrade to buy from hold at Truist, with a $235 target, as the analyst turns constructive on the biotech's pipeline. And on the flip side, here are the downgrades and target cuts. ResMed gets downgraded to neutral from buy at Citigroup, with the target slashed to $235 from $270, as the analyst flags growing GLP-1 headwinds for the sleep apnea device maker. Papa John's is downgraded to underperform from neutral at Bank of America, with the target cut to $34 from $42. A bearish call on the pizza chain's same-store trends. Coinbase sees its price target trimmed to $260 from $280 at BTIG, though the firm keeps its buy rating intact on the crypto exchange. RBC initiates coverage of Costco with a sector perform rating and a $1,000 price target, essentially saying the warehouse giant is fairly valued at these levels. Benchmark initiates coverage of Disney with a buy rating and a $115 target, citing the entertainment giant's streaming turnaround and parks momentum. Let's check in on how global markets are trading overnight. South Korea's Kospi is the standout story, crashing 9% to 6,806 as the chip cycle scare hammers Samsung, SK Hynix, and the broader semiconductor complex. The Shanghai Composite slid 2.1% to 3,913, hitting a three-month low as China sentiment sours ahead of tomorrow's GDP print. Japan's Nikkei 225 dropped 1.9% to 67,242 as tech-heavy exporters got dragged down by the global chip sell-off. Hong Kong's Hang Seng managed to eke out a small gain, rising 0.2% to 24,212, bucking the broader Asian weakness. India's Sensex ended virtually flat at 77,616, up just 6 basis points, as strength in IT names helped offset broader caution. Turning to Europe, which is in its early session right now, the FTSE 100 is holding steady at 10,498 as gains in energy names help offset the tech drag. The Euro Stoxx 50 is dipping 0.3% to around 6,267 as the chip contagion from Asia spills into European semiconductor names. France's CAC 40 is shrugging off the jitters, edging up 15 basis points to 8,351, with luxury names providing a floor. Here's where key commodities are trading this morning. West Texas Intermediate crude is surging about 2% to around $79.50 a barrel, as Middle East supply risks put a bid under oil prices. Natural gas is pulling back nearly 2% to around $2.89 at the Henry Hub on cooler weather forecasts easing demand expectations. Gold is pushing further into record territory, up 0.4% to around $4,016 an ounce as safe haven demand stays strong. Here are the names leading the charge in pre-market trading. And on the other side, these are the names seeing the most selling pressure. Finally, here's what to keep on your radar in the days ahead. June CPI drops this morning at 8:30 a.m. Eastern. This is the single most important data point of the week, for rate expectations and risk appetite. June PPI wholesale inflation data lands tomorrow, giving us the producer side of the inflation picture to complement today's consumer reading. Retail sales hit Wednesday, offering a critical health check on the American consumer's willingness to keep spending. The next FOMC decision is set for July 28th and 29th, and every data point between now and then is shaping whether the Fed moves on rates. August 1st is the deadline for the next round of reciprocal tariffs, a potential trade policy cliff that's already weighing on multinational sentiment. A few more key events on the horizon. Tensions around the Strait of Hormuz remain live, and any escalation in the U.S.-Iran standoff could send oil prices spiking further from here. China reports Q2 GDP overnight tomorrow, a number that could either stabilize or deepen the selling pressure we saw in Shanghai today. Tech earnings ramp up midweek, with ASML reporting tomorrow, and both TSMC and Netflix on deck Wednesday, giving us a real read on the chip cycle and digital spending. July options expiration lands Friday. Expect elevated volume and positioning-driven volatility as a massive tranche of contracts rolls off. Here's the bottom line heading into Monday's open. Stocks are on the defensive with a global chip cycle scare, a live Middle East oil risk, and a June CPI print all converging before the bell. And then bank earnings pile on right after. A cool inflation number could be the relief valve that tech desperately needs, but a hot reading or soft bank guidance risks extending Friday's risk-off tone. With three major catalysts landing at once, expect an above-average volatility open, so stay nimble out there. Let's check in on the crypto market this morning. Bitcoin is slipping 0.2% to around $62,555 as the broader risk-off mood weighs on digital assets. Ether is fading after recently touching a monthly high, trading around $1,771 as momentum stalls near resistance. XRP is drifting lower, down 1.5% to about $1.07, as altcoins trade with a cautious tone across the board. Here are the top movers in the crypto space. Crypto is trading like a risk asset this morning, pressured by Middle East tensions rather than anything coin-specific. But Bitcoin holding the low 60,000s and Ether near its one-month high tells you dip buyers are still in the game. The CPI-driven dollar move is the real swing factor here. A benign inflation print could let the majors reclaim recent highs, while a hot number likely strengthens the dollar and adds another headwind. Keep that 8:30 data drop front and center for your crypto positioning today. If this morning's briefing helped you walk into the market more prepared, drop a comment with the ticker you're watching most today. Smash that subscribe button and ring the notification bell so you never miss a sunrise session. This community gets sharper every single day. And as always, everything you heard today is for informational and educational purposes only. It is not financial advice, so please do your own research and consult a licensed professional before making any investment decisions. We'll see you right back here tomorrow morning. Subscribe so you don't miss it.